Recently, you may have heard that insurance is becoming harder to obtain. Maybe your carrier sent you a letter that they're not going to renew your policy, or you're considering buying or selling and wondering what the heck is going on and how did we get into this mess? You may have even heard that 7 of the top 12 insurance companies have left California, and an increasing number of companies are denying or canceling policies. So how did we get here and what can we do about it? As I mentioned previously, many insurance carriers actually left the market due to not being able to raise rates and also risks being a lot higher in California than in many areas. Geico was actually the first one to throw in the towel, and they left the state's auto insurance market. And then other big names like Progressive, Travelers, State Farm, all followed them. Farmers is another one that has really taken some dramatic measures to try to avoid getting burned. They're also not renewing any old policies, and the word on the street is that they're starting a new company that's going to triple the rates. So right now, Farmers does have a pool of money that it allocated. I'm not sure if it's just to San Francisco or to California, but depending on when you close escrow, assuming that it's not on the 1st or the 2nd of the month when this money runs out, you probably aren't going to be able to get a policy from them, at least not right now. The California Fair Plan will provide additional insurance where other carriers will not, but here's the catch. Their premiums are double, sometimes triple, what you pay for standard insurance. So it's kind of like a lifeline that's also an anchor. As an example, I have a home up in Tahoe, and the cost of insurance on our home is nearly $20,000 per year due to the risk of fires in the area. So that's with 2 insurance companies, one being the California Fair Plan Act, which is kind of hilarious. The good news is that in San Francisco, when our buyers have had to use the Fair Plan for things like knob and tube, it's actually only added like a few $1,000s to the yearly premium, not tens of thousands of dollars to the yearly premium. But make sure that you look into this prior to when you're buying. The California Department of Insurance has definitely taken note that consumers are actually paying more, not less, for insurance due to them not allowing companies to raise rates. And my understanding is that they're in talks with insurance companies to try to find a solution. I do believe that a solution will be found. The goal of the California Department of Real Estate is to make sure that insurance is affordable to everyone. I don't think that they anticipated that their decision actually had the opposite effect that it had. More than likely, they're going to allow rates to raise, and many of the insurance companies are going to come back to California, and it's going to create a more competitive marketplace, which means that if you bought in at a higher premium, likely you'll be able to shop around, cancel that premium, and get some of that money returned. That's my hope. If this is your first time to our channel and you're looking for more videos about real estate and home ownership in San Francisco, make sure that you hit that subscribe button. My name is Ruth Krishnan. I'm the founder of the Krishnan team. We help buyers and sellers every day, just like you, sell homes in San Francisco. So if you're thinking of buying or selling a home, feel free to reach out with any questions or leave us a comment below. We're having our buyers actually check with the insurance companies on the specific houses that they're thinking of purchasing prior to writing an offer. If you're a seller, you also want to be aware of the red flags that can come up, and you want to have a plan to direct buyers where they can obtain coverage, specifically in something like a knob and tube situation. If the house has a loan on it and the buyer can't afford the insurance, the loan can't close. So you're in for a mess of an escrow situation if that happens. So 1, make sure that you're working with a great agent that can help you do some of the legwork. There's a lot of changes that are happening on a weekly or monthly basis, and we're actually spending a lot of time finding insurance companies to partner with to help our buyers and sellers bridge the gaps to solve these problems. Number 2, know what types of issues and concern can make it difficult when obtaining insurance. We discussed a lot of these in this video. Be sure to call and check the coverage for the specific house prior to making an offer. Your agent will be able to provide you with a list of companies that you can talk to help you with your specific situation. If you currently own a home, understand what's in your control when it comes to the ability to secure adequate homeowners insurance for your house. Solution number 1, improve the home safety and the property condition. So perform regular maintenance to keep your property in good condition. Keep your gutters and your drainage clear, and clear your dryer vents. Perform regular maintenance and keep your property in really good condition. Keep your house painted super nice, latex paint, It's like plastic around your house. It protects it. Keep your gutters and your drains cleared. We see a lot of water backups from gutters and drains. Keep your dryer vents cleared. I'm just thinking we should probably do another video just about all the maintenance things on a home. So I'll put that on my list. If you're doing a construction project, consider thoroughly updating all the wire and all the plumbing while the home walls are open. Be sure to keep all the documents from the contractors for the records when you go to sell so that this can be verified by the insurance companies. This is a huge thing. We are seeing that a lot of sellers do not have this. Reduce fire risk by clearing debris, creating defensible spaces, and using fire-resistant materials as much as possible. Install fire-resistant roofing, siding, and windows. Ensure that your foundation and your framing are sound. You could consider a seismic retrofit to make your home more earthquake resistant. Also, this is an inexpensive one. You could consider installing automatic gas and water shutoff valves. We actually just looked at a water shutoff valve that was like $600, and it has an app where even if you have a flow on your toilet, it'll shut off the water to the whole house. Also, insurance companies will offer discounts for having any of these items. Solution number 2, understand your coverage needs. Every few years, it's a good idea to meet with your insurance agent to review the things that you should look out for in your coverage. We did a webinar on this specific topic with Susan Ott. So Susan is a local broker and she had a ton of great suggestions. Feel free to check her out. Insurance needs change over time, and it can be a great idea for someone to look at your full picture. I have to say, when Susan went through all of my insurance, I was shocked by the number of things that she came up with that were action items for me. She had a lot of great tips in there. We all want to feel like we've done all that we can to protect our homes, which for many of us is the biggest investment that we'll ever make. Insurance is a really important way that we can feel safe from potential issues and disasters. Keep in mind that the insurance industry is ever changing, and what may be true today will not be true tomorrow. As a homeowner, it's super smart to keep informed on the latest. Feel free to reach out to me if you have any questions about living in San Francisco. We cover all kinds of topics from neighborhood reviews to market data. If there's a real estate topic that you'd like to know about, please leave it in the comments. And if you're thinking about moving to the San Francisco Bay Area, give us a call or send us an email. Our contact information is in the description below.